is a gorgeous day here in the fruited plains of the Midwest, and we are coming to you for our third episode of Market Masterminds. I'm one of your hosts, Chase Pals, and partner of I10IQ, Mr. Hamp.
Yeah, good day for sure. So Jeremy Hamp, another host here on the Market Masterminds podcast, and also partner and owner here at I10 Research.
To the fearless leader.
Excellent. Well, the fruited plains is good. We could also just, since we're making up stuff, Wall Street West.
Wall Street West. Ooh.
We're just west of Wall Street by a stitch. I mean, depending on your map, it's about that far.
I mean, it's a direct flight
I'm Aaron Einbrook.
Out of New York. Yeah.
I'm Aaron Einbrook, chief analyst here at I10IQ. So,
well, I love it. That's great. I'm going to say it because I say it every time. Like and subscribe to the channel, share the show with your friends, follow us on Substack, and subscribe to our reports, right? 100%. That's where you need to be.
What are we going to do first? Do you want to talk about reports first?
I think we should. I think people need to know what's happening because we're calling some good stuff right now. And if they're not subscribed, it's hurting them for sure. I know Jeremy's feeling real good about where he's at.
Feeling good today. Picked up out of a sector opportunity a week and a half ago. Just as Aaron called it, right? I mean, we saw some movement. It was still positive. It was still performing against the SPY. And part of the game, right, is to generate alpha, whether that's for yourself, for your clients, whatever it may be. And yeah, happy to see
alpha creation. That's what we're
alpha creation.
That's our bag right there.
Yeah,
alpha creation.
Alpha there.
happy to see
here,
the flip.
Let me walk through some of these things so we can deliver some value. This is today's core asset classes report.
Ooh,
if you're not a subscriber and you want to get your hands on this little bit of gold every week, you should head over to Substack. It'll be available for you there. Here's all the markets that are in core assets. So it's 25-ish, maybe a few more pages, covering stock indices, domestic, a little bit of foreign, fixed income, qualities, all represented, some commodities, and some additional markets of interest like the dollar and Bitcoin, since
well,
people are interested.
At some point we're gonna have to tell your early trading days of some of the old commodities in the crude space. We'll have to talk about it at some point. It'd be good.
Yeah, there's some fun stories from days as a commodities trader. Things that you think would never happen, they happen.
They
do. But another story for another day,
for another podcast episode. That's for sure.
So S&P 500. Here's where we're at. This was issued before the open today. Mm-hmm. SPX is trading higher. We're at like 53.28 now, so we're
jump,
just peaking out above these two prior highs here. But the takeaway from this is that the pullback in SPX came right down to nearly tag exactly the top edge of our support zone here, and then reacted back to the upside. The bias is bullish. Until and unless 5191 is taken out on a index basis, there's no reason to think anything other than that market is going higher. There just isn't.
Nice.
NASDAQ, this is the baby right here. This guy pulled back and actually got into our area of support here, which for our subscribers provided a very nice tasty little entry into the ongoing uptrend, because who doesn't like to buy a pullback that immediately goes into your favor? That's always makes for a good day right there. So yeah, any entries into the NASDAQ or technology on the test back into this wide area or this robust area of support are looking really solid. And the NASDAQ, what do we got on the NASDAQ now?
916.
It's ticking up to 18,925.
Ooh, 25.
Yeah, like that. 18,925. So we're knocking on the door, up towards these highs. And yeah, until and unless this 18,189, which was the dip into support,
Right.
until that, and unless that ever comes out, there's no reason to think about anything other than the ongoing bullish trend in the NASDAQ is in force and continuing.
Wow.
So good stuff there.
Yeah.
And that is the that helps our
Helps
sector
the market.
opportunity play there, right, Mr. Hamp?
It sure does.
The S&P sector spiders technology ticker XLK is not hating the new the up move in the NASDAQ right there. This is where I'm going to end. I'm going to end this little ditty on stock indices with this. But this is the Russell. This is the small cap index, Russell 2000. The ETF tracker is IWM. This guy has been an interesting and different bird than our large cap blue chip stock indices. The S&P 500 largest companies, the NASDAQ 100 has all the largest technology related companies. And then this is the small cap. So it's a lot broader. It's 2000. It's not 500. It's not 100. It's 2000. But this guy's been stuck in the mud for a lot of years. And really, to get some runaway upside in the stock indices, big degree, large degree trend up moves, we need to see this guy take out 207.62 and challenge and exceed this 212.25. Those are highs that we've been stuck under or stuck in for a while. And just, comparatively, even in the near term, you can look in 2024, the NASDAQ's charging higher. We see a pullback to support, charge out to new highs, pull back to support again. Now we're moving on the upside again.
Yeah.
S&P charging higher, pull back, new highs, pull back nearly to support, moving back to the upside. Look at this guy. Had a pretty hot start right here to finish 2023.
Really climbed.
Then just did a, kind of a messy little thing here, pulling back, staying within this big range here. This guy needs to get out top, like the NASDAQ, like the S&P, and then we can get to a spot where we see some in sync moves to the upside, which are good for all stocks when we get in that kind of environment. But until we do, nothing wrong with holding the leaders. That's all I'm going to say.
It's wild to think the NASDAQ is closing in on 20,000, right? Like, I mean, it's just impressive. And markets, I don't know. It's wild to think about that. And then, looking at some of the other stuff that's individual performers. I had a buddy ping me the other day. He was like, any insight into why I got my butt handed to me on my holdings in Salesforce and ServiceNow? And I was like, well, I don't have a direct answer for you, but I'm sure we could talk, we could talk about it at some point, and I could get you in front of Aaron and we could, teach you.
Yeah.
You'd been using
this
BAP. What is it?
Chase, you and I talked about this, but
yeah,
this is another, I guess, good, great example, because, I'm not covering Salesforce here on the regular, but when I get things like this all the time from portfolio managers, what do you think of Tesla here? What do you think of Disney here? What do you, and then just fill in the blank. And there's always a lot of potential, individual companies have stuff going on, right? They're all trying to make moves in their individual markets. They have market share. They're trying to, defend and take from whatever. Earnings come out and the market reacts. Earnings can, you can have good earnings and still get punished if your stock is priced to perfection, and you know, while they're positive, you maybe miss on something that, you know, something key that the market is interested in. So CRM, Salesforce,
Still funny
reported.
they got that.
Yeah, they reported and they got smacked.
Yeah, they did.
But this is what I pointed out to you.
Yeah, we looked
Chase,
at
let
it.
me actually let me.
And do you have it pulled up? That would be.
Yeah, I'm just
able to
pulling it
show.
up here, and I'll throw it into the screen share. You can see this, right? This is the
Oh,
chart
yeah.
that I slacked you. So
Yeah,
Salesforce had come back to consolidate just under its highs from 2021,
yeah,
and then it had pulled back here. This is like where you know, where it was prior to its earnings release, which is, you know, from a large degree picture. I mean, it's within its same range, but it's near the highs. And then it got completely crushed. This is like, I don't know, 15% immediately from like the prior close to where it basically started trading on the open the next day. And my point to you was, it got crushed, but it didn't randomly get crushed to some random lower price. This gigantic area of volume that was established over the course of the move higher in 2023, it's unmistakable right here. This volume is, this big red volume profile is all the volume traded from the beginning of 2023 to the end of 2023. So then close the book. That's what it looks like. That's it. So when this thing is getting crushed, where are professionals looking to step in and know that there's liquidity? It's all the way back here. And look at, you know, exactly what this is, the same thing in the NASDAQ. The NASDAQ had a large distribution of volume that was a bit higher. It went and tagged into that distribution and rallied out of it. Salesforce, when it's, you know, when it's being crushed and it's down here, if you don't have this view, you don't know if it's going to go to 200 or 175 or one, you know, it already made a huge percentage move. But the point being is, it didn't make a huge percentage move to some random location. It went exactly to the area that professionals and I10IQ that are watching for these volume at price levels and areas of significance, we have our eyes on. We're well aware of these. This has been this 204.91 to 216.89 has been known to everybody since 2023. So the fact that it got hit on June, you know, June whatever, after Salesforce reported earnings halfway through the year in 2024, doesn't matter. It's there. And it, you know, it's on, you know, it's on the chart, it's in the record, it's market generated information. That's what we do.
Yep.
All data, out, right? Like, I mean, we went through as we were analyzing this, and you know, we looked at the earnings call summary, and we looked at the comparisons and the information that we're able to produce and access. And like you said, Aaron, right? I mean, it's a perfect market, right? That's where it was set. That's why the price was where it was until it wasn't. And you can grab opinion, you can grab, you know, a news article, you can listen to an economist say what they think. But as you just demonstrated and showed, right, it's all about volume at price. And that's the methodology that, you know, you've based your research on for multiple decades.
Right.
And guess what? It works. It's right.
Well, it works because, and I say this, I don't get tired of saying it, but it's because volume moves markets. Other stuff doesn't move. Volume moves markets. That's the mechanics of how they work. So keeping track of what moves markets makes sense. It works because that's how the market works. The analysis that I do, focused strictly on volume, is focusing strictly on what moves markets and how they work. So it works. It's better than the rest. And I'm not sad or ashamed to say it just is.
You know, we're kind of creeping into June here, you know, June 5th right now. Summertime's, you know, kind of in full swing. Everybody's going to the pool, people are going to the beach, they're traveling. And you know, I-10's traveling this next week, brother.
I was trying to figure out what are you
You didn't know where I was
here?
going, did you?
Like,
You
what are we
didn't
talking
know.
about? Are we talking about like a company outing to the pool? Like,
Well, listen.
Where are you going, brother?
The pool at I-10 headquarters
The
is
sunscreen, you know, it comes out in force when summer hits. Jeremy
Well,
knows what I'm talking about.
That's what happens when you're not as fully covered as you
This
used
is when this is why bald guys love hats, especially in the summertime.
That is true. That is true. No, dude, we've got a huge event this next week. Where are we going to be? Aaron, you want to call
We will
out?
be at the 20th annual PMI forum. The Portfolio Management Institute has their 20th annual forum in Austin. Yep. We are an educational partner, and we'll have a tech table there for the duration of the event. Maybe we'll get lucky and get slotted between the JP Morgan guys and BlackRock, some other, you know, some other sponsors and participants that, you know, you may have heard of. But yeah, the laundry list of bigs that will be there, and your trusty I-10 IQ gang will be there. That's well, right. at least you and I will be there. Jeremy's going to hold down the home front.
He's golfing. What are you talking about? Yeah, he's going to hold the home front down on the course and do his big fun golfing event. And
might be on a little bit of a golf trip during that time, so I'll be sad to miss it. But yeah, super excited for you guys to represent I-10 IQ and be a part of the 20th annual. So it'll be a great event.
Yeah, it's going to be good.
Well, Jeremy, you'll be at the next one. That's the first days of August.
That's right.
For the Academy of Certified Portfolio Managers.
Yep, absolutely.
Out in Denver. You'll be at that one with Chase and I. And
it's going to be a busy summer for us, which is good. It's fun. I love it. A little travel with you two will be good as well. So we won't get in too much trouble, I'm sure. So
never. That's not what we're about. We're not trouble.
No. Data driven reports. That's right.
Data driven trouble.
The data driven trouble.
You'd be in trouble without the data driven information.
I love it.
I-10 IQ.
100%. 100%. All right, listen up. And if you're listening, I'm sure you're listening and you've made it all the way to the end of the video. Don't forget, you get a free week to subscribe to our reports at Substack. You can activate your free week anytime. So if you're a free subscriber already, that's great. Appreciate that. Thankful to have you in the community. But don't forget, you can get access to all the reports, the core assets, the sector reports, the dailies, Aaron's video on the pre-week video that you get on Sundays. I don't know but we haven't talked about that a ton, but that's in there too. And you can get access to your free week. You should do that, engage that, and pull the trigger on those free weeks. It'll be worth it for you, for sure. And in the event that you haven't done what I already told you to do once, Jeremy, what am I going to say?
I have a feeling you might tell anybody that's out there listening and watching to go subscribe, go like, go share, go tell your friends. As we said right at the top of the conversation, it's about alpha generation. And if you're in that game, you want to make some money, make your clients some money, have a data-driven understanding of market movement. This is the place to get it. It's that simple.
Yeah. Well, you know what? It's something I didn't run this by you guys ahead of time, but
run it, baby, run it.
To that end, you know, we're doing a lot more education and educational type content around reading the reports, utilizing the reports. If that's you, when you look at the research and you're like, this looks great, but I don't quite understand it. This looks great, but I'm not sure how to make money from this. Engage with us on Substack or reach out, because we're angling towards making some additional content and always happy to have conversation about how do you use this research to your maximum advantage. And I would hate for just a lack of understanding there to keep you from benefiting, I guess is what I'm saying.
That's right.
Agreed.
That's a good call out.
All right, guys.
Excellent.
Until next time.
Until
Take
next
care.
time.
We'll see you.